Well, hello again, Maverick traders. Joe with you here on a Tuesday, the 28th of May, coming out of a holiday weekend. Hope you guys had a great holiday weekend. Let's jump into the markets. I'm going to be talking about the meaningful news of the day, what's going on technically with these markets, and as always, let's share some trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, not a lot to go off of just one day since Friday, but let's talk about it. How did we finish? Well, pretty much flat across all three of our majors here. I'll make a point. Dow was down again slightly, S&P completely flat, and the Qs floated higher. We've been seeing this trend for quite a bit, about a week or so. The Russell's pretty much flat. The oil and gold look like they had a bounce coming off of a pretty decent little pullback last week. Advanced decline line, 59% declining, 37% advancing. Below the 50-day moving average, it goes back and forth between that 50-50. Let's go straight to the daily news. More of the same. The S&P, the NASDAQ, and the Dow are putting in three technically different-looking charts, especially over the last, I'd say 2 weeks. We've got a flat a flat S&P. The Qs are floating higher. NVIDIA had a lot to do with that. Some of the big tech and the larger cap stocks that a lot of people want to be in have been kind of moving higher as well. And the Dow moved lower. And it's interesting because all of this movement has happened at subsequent highs or their previous highs. So the Dow has been pulling back pretty aggressively since it set its highs. The SPY has been consolidating. The Qs have been floating higher. So we got three different directions going on right around this area. The Fed remains hawkish and sentiment remains optimistic. Once again, Rob did a great recap over the weekend. Not much has changed coming out of that. Let's just jump straight in the charts. You can see not much does one day bring. It's pretty much this candle here, but we are still well within this range we discussed of this consolidation area. Very strong in the longer term, but in the shorter term, looks like we got a little bit of a push and pull going on. We go over to the Qs, and you will see that it is a little bit different of a story. I'm going to go ahead and just kind of give it this little nod here to this upslope. So you could see the last few days in the SPY were an obvious consolidation where you got the Qs here. And I'll try to draw the same channel. You can see that those Qs are actually, or that the NASDAQ, that big tech is floating above its resistance area. Not that straight consolidation that we've seen in the SPY, but it's actually moving higher. We don't expect it to do much this week. It should be kind of a chomp around. We are actually going into the summer months. And so we want to see what these markets can do over the next few days, especially with lack of any sort of outward stimulus or even in the form of economic reports or economic events. Let's get to that heat map. Might have done the NASDAQ here. Look at that. Another 7% out of NVIDIA. A couple of the larger chip makers followed suit. AMD had some fun. Intel, Micron, things like that. So yeah, it's kind of this huge sympathy push, and that could be moving these higher. Here's the bounce that we saw in the energy sector. We know that the Dow is heavy in energy, utilities, and materials. So a whole lot of the same that we saw end last week. Where does that leave my outlook? Well, to tell you the truth, folks, it doesn't change anything. Upward slope above the 20. We've got a flat outlook for the week. I am not changing that from Friday's class. I still believe in it. I don't think we go much of anywhere. We might threaten, we might push higher or lower, but then I do think we retrace without any sort of major event out there. It's kind of far and few between when it comes to massive opportunities out there, but there are some opportunities that follow continuation or some trends that I have seen as of late. And one of my favorite things I like to look at here is this FinViz grouping area. This is kind of neat. This just gives you basically performances across our sector over a day period, a week period, a month. things like that. To echo what Rob brought up on Friday, so this is 1 week performance. Now, folks, this is actually from this Tuesday, which is today, all the way back to the previous Tuesday. And we had to talk about, it was a flat week overall, but it wasn't. It was a lot more bearish than it appeared. You guys can see here, if it wasn't probably for NVIDIA and a couple of sympathizing moves in big tech and some of those larger companies, this would have been a pretty bad week. That leads me to show you, hey, where should we be bearish? Well, I've got a couple of healthcare. Well, I've got one we're going to talk about, but healthcare is a pretty consistent sector that seems to be bleeding off. Energy is also one, even though it is bouncing really hard today, which you kind of figured it would, since energy did come off of a pretty bad week previously. So basic materials, real estate, and healthcare on the bear side. And let's stick with what works. Technology, communication services. Look at that, keeping these things on the bull side. Now, I do not want +3s and -3s. But boy, something 0 to -1 or 0 to +1 would make sense if you're looking to add a couple of trades over this week and maybe going into next. So let's take a look at what I got. First up, you can see I carried over the trades that we talked about on Friday from the trading room, but specifically I want to talk about AEM, very strong mining stock that looks to be in a beautiful bull pullback that actually might have confirmed today. And then let's skip on the way down to, yes, healthcare, GILD, a trade that we like a lot. It looks like it's just rolling over and breaking some support levels. You guys can check those other ones out as you'd like. First off, this is AEM. It has got a great chart. I love how this thing has just climbed up. It's staying above its 20-day moving average over quite a while, and it does like to pull back. Here's a little bit of a consolidation, but it does like to pull back, even if that was short. I like this bounce off of that rising 20, a little bit of a confirmation today, so this could be a potential bull. Now, I wouldn't go a +3 on this, even though it could look like a +1, +2, depending on where you target it, somewhere around that 71 level, or you could even draw your trend line and play it somewhere around the 73, 74 with a little bit more time behind it. I wouldn't go too far. I would actually just kind of leave it as a +1 and kind of target here at the 71 over the next week, week and a half. Let's jump straight over to our bear. This is GILD, Gilead Science. I do like how this consolidated and it looks like it just kind of gave it up. So it was holding in here for a little bit. I'd like to see a little bit more volume, but the whole sector itself, folks, is starting to kind of fall apart. XLV as a whole doesn't look too bad. It seems just like a pretty aggressive pullback, but I've come across quite a bit of these healthcare sector stocks that just do not look very pretty. So it has kind of pushed through pretty aggressively, pretty quickly with these few candles, but that doesn't mean that you can't play it. Maybe it retraces back up to this 65 area and then rolls back down, or it consolidates. That's why I don't want this to be a -3. I want you to play it more of a -1, at least in the shorter term. And that's about all I got for the trades, especially after coming out of the weekend with only 1 day to go. But hey, let's see what happens. So no will trades from last week's Outlook at all. Outlook remains on track for a flat week moving into the summer. What do we have economic-wise? Well, we got a consumer confidence number. I don't think that matters. GDP Q1 first revision. Tell us something we don't know. That PCE number might be a little bit, it might have a little bit of a reaction to it. However, the Fed did come out last week saying that, look, we're going to keep them where they're at for a while. We're worried about inflation raising its head. So if that number comes in way off of its base, you could get a reaction, but I don't think that will happen. For now, we'll continue to check potential trades for earnings. You saw how some of these larger companies can move the markets overall. Don't anticipate anything, and make sure that you just kind of play things a little bit tighter to the zero than you would, and just go from there. Try not to look too deep in anything because there's probably nothing really out there to look at. So follow your plan, follow your rules, and we'll talk to you next time. Bye, folks.